Hello, thanks for tuning into Kalkine TV. I'm James Preston and this is The Hot Performers, a show where we take a look at stocks and sectors that could be heating up. In this edition, we're highlighting 5 high-growth ASX shares that could lead to a very Merry Christmas. Growth stocks are known to have high growth potential. These companies report higher revenues and profits than average companies within the same industry, which is what makes them particularly popular for investors. However, these stocks generally distribute lower dividends than others. The retained earnings are reinvested by the firm's earnings in capital projects. So whilst there are benefits to investing in such a stock, there's a little less security than some of the big blue chip options. But with that being said, let's take a look at 5 high growth potential stocks, beginning with Airtasker. Listed on the ASX with the ticker code ART, Airtasker offers an online and mobile marketplace to users, which helps them to outsource routine tasks. In the 2021 financial year, the company reported a high gross profit margin of over 93%, a revenue rise of 38%, and positive operating cash flow of 5.5 million Aussie dollars. The company aims to scale up its marketplaces to the US and also the UK, and the company has invested in marketing, creating new service categories, and developing its rebooking model. The next growth stock to take a look at is Elmo Software, listed on the ASX with the ticker code of ELMO. No, not the fun red little Sesame Street animal. Elmo Software provides cloud-based human resources and payroll solutions for organisations. In the 2021 financial year, the annualised recurring revenue rose by 52.1% to 83.8 million Aussie dollars. It has an annual recurring revenue guidance of between 105 and 111 million Aussie dollars. In the first quarter of 2022, the company reported a 61% increase in ARR and an organic ARR growth of 35% over the prior corresponding period to 88.5 million Aussie dollars. Temple & Webster Group, listed on the ASX as TPW, is another high-growth stock. Temple & Webster is an Australian-based online retailer, and the firm has recently invested heavily in both its offline and online businesses. At its recent annual general meeting, the company said that its revenue for the period between July 1 and October 15 rose 56% more than the prior corresponding period. CEO Mark Coulter said that the Temple & Webster company continues to experience strong tailwinds, including the ongoing adoption of online shopping due to structural and demographic shifts and an acceleration of these trends due to COVID-19. Our fourth growth stock will have you saying that you've got the hots for what's in the box with the dots. Dominos Pizza Enterprise, which is listed on the ASX with the ticker code of DMP, is our fourth pick. Dominos Pizza is the largest pizza chain in terms of network store numbers and sales in the country. And the company, in its latest trading update, released on the 3rd of November 2021, said that its network sales in the year to date were 8% higher or 4.3% higher on a same-store sales basis. The company's management noted that the growth compounds are up 14.9% for the sales compared to the prior year. And finally, we need to take a look at Breville Group. Breville is listed on the ASX with the ticker code of BRG. The Breville Group is a provider of small electrical appliances, and Breville and Sage are its popular brands. The company's revenue growth rose by 24.7% to nearly 1.2 billion Aussie dollars in the 2021 financial year. And it also delivered a 42% rise in its net profit after tax to 91 million Aussie dollars. The company is upbeat about its future performance due to the demand and popularity of its brands, global expansion, acquisitions, and continued investment in research and development. So there you have it, 5 high-growth stocks that could be helping you to stuff your stockings come Christmas time. I hope you enjoyed this edition of The Hot Performers. Make sure to keep watching Kalkine TV for the latest market updates, business news, and exclusive interviews. I'm James Preston, signing off for now.